Hi everyone, and welcome to the Buffett and Beyond Research Stock of the Week. And we're going over Adobe because we are revamping our growth portfolio, and Adobe is in that portfolio. And the last time we went over Adobe, we asked this exact same question: is Adobe beginning to lag the rest of the computer stocks? And Adobe was once one of the better stocks in computer software. And remember, folks, if you want to live on this beach like Jimmy Buffett and not have to worry about answering that question, because we're going to answer it right here, then you've got to learn how to invest even better than Warren Buffett does now. So let's look over Adobe, and it develops various software computer products that enable users to create, transfer, and print electronic documents. That's what I use it for. And in fiscal 22, the company operated in the following primary business segments: digital media, digital experience, and publishing and advertising. And Adobe's leading software products include Illustrator, Photoshop, InDesign, and of course Acrobat, which we probably just about all know about. Almost 30,000 people in the workforce there, so it's a pretty big company. Now, when we looked at this last time, here's what we looked at, actually a little bit more than 5 months ago. We looked at the green line, of course, is Adobe, and we're relating it to the average stock in our database, which is about 700 or 800 stocks that we look at all the time. So we had a 21% clean surplus ROE for Adobe, which is better than the average stock, 19.7 net income percent over the 13% average for the average stock, and a nice revenue, 16.1 over the average stock of 7.1. Now, let's go ahead and see what has been fairly recently, and now we see the clean surplus ROE dropping down to 18.3. Let's look at the last chart. It was 21, now down to 18.3. Now, net income has fallen below the average stock, and before it was 19.7. It has fallen quite a bit, and we don't like that at all. And then the revenue was almost about the same, but now for 2025, we are looking at this number being about 12.9%. We're looking at this number being 8.9% and this number being 17.9%. So that you can see we went from being a really, really nice stock down to, okay, falling. And we don't like this when it falls below the average stock in any area. And then the new numbers that just came out reduces this down to 17.9, this down to 8.9, the net income, and the revenue down to 12.9. And folks, when the revenue starts to drop, all these other numbers are going to start to drop. So we'll see probably lower numbers the next time we go over Adobe, if we do go over it again. Now, let's look at the past 5 years. Now, look at the state. This is as of September, the beginning of September, and black line's the S&P 500, and it was up about 80%, the S&P, while Adobe over 5 years was up about 110%. Then, let's bring us up to today. Now we see over 5 years, instead of being up over the S&P 500, it is now down below the S&P 500. So this stock was up, made a double top here, came back down, rebounded, made another double top, now came back down and is rebounding a little bit, but we don't like this signal. You see these declining tops here like that. That's not a good sign for the stock. So the stock is falling out of favor for market participants, and they're just not buying this stock. Now, when we look at 1 year, well, we can see, and this was just the other day that we took this, we can see that it's been having a lot of trouble this past year, and it just doesn't want to get out of its own way because there are other good stocks. So we're looking at Adobe, even though it's in our portfolio right now, hasn't done well this year at all. And folks, we don't think, in fact, we're pretty sure it's not going to be in our portfolio for 2025. And those portfolios come out in about 2 weeks. So we can say goodbye to Adobe after a long visit with us with it, but it's just not performing as well. In other words, the other computer stocks out there are taking market share from Adobe. That's not a good sign. The earnings are declining. They're still making money. It's still a pretty good stock, but the earnings are declining at an accelerating rate, and that's what bothers us the most. And that revenue is coming down. If you don't have that money coming in the door, there's not much you can do to get it to the bottom line. You got to have that revenue, and this stock is losing revenue rather quickly. So, folks, we had a pretty good week. We're having a great November. We had a great beginning to December. So you go out there, enjoy this holiday season, take a walk on the beach, look at these beautiful clouds, take a walk around the golf course, be with your family, have Sunday dinner with them. That would be nice. And if you celebrate Sunday on a Saturday, then be with your family no matter what. Most of all, stay safe, and we'll see you right back here in a couple of days.